Action.
Hey guys, and welcome to the new episode of The Daily Show. So today we're going to talk about a specific subject, which is the age of Bitcoin. And today we have with us Wenjie, who is an IT specialist, Alexey, who is a financial lawyer, and Olga, who is an international trade business specialist. And I will be your host for today. So first of all, I'm going to ask Wenjie, how does the Bitcoin work?
Good question. Bitcoin is fully digital currency with no government to issue it, and that no banks need to manage accounts and verify transactions. And also that no one really knows who invented it. What does it mean to have a Bitcoin? There is an opinion that cryptocurrency is equal to ledger minus trust, but plus cryptography. What does it mean? Please stay with me and I will explain to you guys, and it might be a little technical, but if you want to invest on Bitcoin with your own money, it's probably better to understand how does Bitcoin works. Remember, two key points of the cryptocurrency protocol are digital signatures and the cryptographic hash functions. Next, ledger. Do you have the experience that you and your friends exchange money, like paying your share of the dinner bill? Salima, do you have this experience?
Yes, it happens. Yes.
If it happens very frequently, it can be inconvenient to exchange cash all the time. So you might keep a communal ledger that record all of the payments that you intend to make a periodic liquidation. Since the ledger is a communal, so everyone should have access to it. But how could we ensure that the added bill from someone is actually real? Like handwritten signatures, the idea here is that A should be able to add something next to the transaction that proves that he has seen it and that he's approved of it. It should be infeasible for anyone else to forge the signatures. And then comes the digital signature. Everyone generates what's called a public key and a public key and a private key pair, each of which looks like some strings of bytes. We can also call the private key secret key, SK. Initially, in the real world, your handwritten signature looks the same no matter what document you are signing, but in a digital signature is much stronger. It changes for different messages. Different messages completely change what the signature on the message should look like. Producing a signature involves a function that depends both on the message itself and on your private key. Message should have also include some sort of a unique ID associated with the transaction. Each payment will have a unique ID attached to the message. Verify function is to verify if the signature is valid. This comes to public key. All it does is output true or false to indicate if this was a signature produced by private key associated with the public key that you are using for verification. So now it comes to the question, how can we ensure that everyone's ledger is the same? There is a rule to Bitcoin that always trust whatever ledger has the most computational work put into it. It means always trust the longest ledger. Here comes the hash function. What's hash function? The inputs for one of those functions can be a kind of message. The output is a string of bytes with some kind of fixed length, like 256 bytes. The output is called the hash or the digest of the message. It looks like random. Actually, it's not. It always gives the same output for a given input. But if you just only change one character, the hash changes completely. That means it is infeasible to compute in the reverse direction. The Bitcoin protocol states that if you count a specific value within a certain period of time, you will be rewarded with Bitcoin reward, which is called mining. The reversibility of the hash function requires that someone must do a huge amount of computation to figure out the value, and the process of doing a huge amount of computation is the process of mining. Using Bitcoin as a reward encourages people to keep creating longer ledgers. And if you fake a ledger in order for other people to believe your ledger, you have to be faster than all the miners in the world combined. This also makes faking Bitcoin one person against all miners, making the possibility of faking Bitcoin infinitely close to zero. So the protocol to Bitcoin ensure its security and privacy. Technically, the Bitcoin is very safe for transaction.
Okay, thank you for this input. And now we're going to move on with Alexey to talk about the legal aspects of the Bitcoins in different countries.
Okay, thank you. The legal regime for cryptocurrencies, in particular the Bitcoin system, varies considerably from one country to another. In several countries, operations with cryptocurrencies are officially allowed. They're usually treated as a commodity or investment asset and subject to relevant legislation for tax purposes. In some countries, Bitcoin is recognized as a currency of account, for example, in Germany. In others, for example, in Japan, Bitcoin is legal tender with a purchase tax. In some countries, for example, in China, Bitcoin transactions are prohibited for banks but are allowed for individuals, while the country is leading in the field of mining due to the presence of the largest production facilities. In Switzerland, cryptocurrencies are subject to the same rules as foreign currencies, and this country is one of the most favorable jurisdictions for Bitcoin startups and public blockchains. Next slide, please. In December 2017, Belarus signed Decree number 8 on the development of the digital economy, which created a fundamental legal basis for the development of the crypto industry in the first country in the world to legalize smart contracts. According to this decree, individuals are exempt from tax on all cryptocurrency transactions until 2023. They can mine, own tokens, buy and sell them. Legal entities receive the right to create and place their own tokens, perform transactions through exchanges and exchange operators. And the next slide, please. In Russia, for 2017, there were no restrictions on the use of Bitcoins. The need to regulate digital decentralized assets positively was proposed by Russian president, but there were a conflict of the opinion of the Deputy Minister of Finance, Alexey and Sberbank CEO, German Gref. A negative attitude towards Bitcoin was expressed by many other Russian politicians. For November 2019, the legal regime of cryptocurrencies in the Russian Federation is being discussed. On the 1st of January 2021, the law on digital financial assets and digital currency entered into force in Russia, which allows treating cryptocurrency as a variant of digital currency, prohibits its use in Russia to pay for goods and services, but allows it to be used as investment object. Thank you.
Thank you, Alexey, for this input. So now for Olga, we're going to ask how the Bitcoin could shake up the international trade. So the floor is yours.
Well, how Bitcoin could shake up international trade. After years of skepticism about their security value and staying power, it seems that cryptocurrencies like Bitcoin are ready to take on the world markets. There is a serious speculation that central banks will begin to hold cryptocurrencies in the nearest future. Investment firms such as Goldman Sachs have released information to clients about investing in Bitcoin, and CBOE Holdings has begun to sell Bitcoin futures. This means the time has come for those in international business to look at how Bitcoin and other cryptocurrencies will affect global finance. Cryptocurrencies are now predicted to disrupt the way people do business, and those buying and selling across borders stand to benefit. Well, what about the benefits of cryptocurrency for international trade? For those buying and selling goods and services across borders, cryptocurrency offers a host of benefits. Some of the cryptocurrency and blockchain technology are poised to disrupt trades. Finance includes a lack of exchange rate. If you are dealing with many international suppliers and buyers in a variety of countries, you have to deal with a myriad of exchange rates. If everyone is using Bitcoin, however, you are all dealing in the same currency with the same value without the constant hassle of monetary exchange. The next one is fast money movement. Cryptocurrency transactions are near instantaneous. The transfer itself posts immediately, and it takes only about 10 minutes for payments to be validated for blockchain. The third one is secure payments. The money you receive when you take a Bitcoin payment, it's also secure. Users need to have the money available upfront, so there is no chance of payments bouncing or credit transaction being cancelled. The next one is lower taxes and fees. Because cryptocurrency is a peer-to-peer monetary system, there are no taxes that govern them, and transaction fees are almost non-existent. And detailed records. The blockchains created from cryptocurrency transaction create clear, secure records that can be tracked and verified. There is talk of tying contracts and shipments to transaction within the blockchain to make business and logistics easier to track. With blockchain technology backed by cryptocurrency, processes could become more efficient, easier, and transparent. In fact, many companies are so interested in the possibilities of blockchain technology that Danish shipper Maersk has partnered with IBM to pilot blockchain shipment tracking system. Well, so let's move on to our journalist. What news shall we tell us?
Thank you, Olga, for your insightful input. So now we're going to talk about the latest news concerning the Bitcoin. So you may have heard about the latest news going on about Elon Musk and his tight relationship with the cryptocurrency. During the past few weeks, the billionaire has proven his full support of the Bitcoin by investing $1.5 billion into the Bitcoin and claimed that his company will be accepting the cryptocurrency for payments. Musk has also been increasing the prices of cryptocurrency through simple tweets, as you can see on the screen. And then Bill Gates seized the occasion to talk about the cryptocurrency overall. He stated that he knows that Elon Musk is quite sophisticated and well placed to do such an act and invest in the Bitcoin. However, he said that American investors should not follow the same path. And although Gates stated that he believes that Elon Musk did a good thing, maybe, but he is not a big fan of the cryptocurrency, mainly for environmental reasons, because the actual coin mining calls for a lot of energy. Now for the Citibank's report. As for the latest news of this Monday, 1st of March, Citibank's researchers believe that the Bitcoin could become an international trade currency. A new report of the banking giant shows that, I quote, a focus on global reach and neutrality could see Bitcoin become an international trade currency. This would take advantage of the Bitcoin's decentralized and borderless design. It's like a foreign exchange exposure, its speed and cost advantage in moving money, the security of its payments, and its traceability. Citi's report explains that the Bitcoin in the role of a global trade currency could be used by importers and exporters to pay for goods and services directly, simplifying the process of international trade. A decentralized cryptocurrency may be preferred to a central bank digital currency, it argues, because no government or outside entity can take steps that might affect the supply of the trade currency, helping to decouple trade from political considerations. All of this debate leads us to one specific question: what does the future hold for the Bitcoin? As we saw with Olga, and as I'm going to talk about it again, the cryptocurrency could have a good impact on economical aspects since it offers many opportunities. First of all, it's a beneficial rise in economic activities. For example, the Bitcoin has already permitted many people and companies to develop and flourish. Then we can talk about the great opportunities for poorly banked countries. Then also we can talk about the low transaction costs, because cryptocurrencies and blockchains do not need an actual brick and mortar building to exist. The costs associated with the transactioning are minimal. Then increased transparency of transactions, and last but not least, more power to entrepreneurs. So thank you for this, for your attention, and see you next time. Thank you.
Thank you.